Hello students, welcome to the Recitals in Depth by Vajiram and Ravi. Here we will be covering the economy and infrastructure December 2024 current affair topics in great detail. The broader themes which we are going to cover are as follows: Indian agriculture, money and banking, public finance, investment and infrastructure, and social development. So stay tuned. So hello students, welcome to the second part of the Recitals, economy and infrastructure, where we'll be starting where we left at. We'll be starting with the decline in 10-year government bond yield, that is with reference to the Government of India bonds of 10-year tenure. So in this one, we'll be discussing regarding the various basic things in the very beginning, right? So when we talk about bond yields, it often strikes a fear in the minds of UPSC aspirants, because this is actually one of the most difficult topics or say concepts in economy to understand. But let me simplify it for you. Now, for basics, firstly we'll be focusing on what is a government bond, right? So when we talk about government bonds here, bonds are a way in which governments raise money for various infrastructural projects, for various social security or welfare government schemes, right? So government needs on a day-to-day basis money for various activities. So that is why sometimes the government would be very interested to raise money via, say, issuing bonds. So government will tell the RBI one day that, okay, in my name you issue some bonds, right? So whenever we have any bond, there is, for example, a government bond of 100 rupees, there is some returns on the bond that we expect. For example, say we have a 5% return for a period of 1 year. That means generally what happens, this 100 rupees plus 5% is the money that you will be getting after 1 year, that is 105 rupees. So in very simple terms, let me explain this. In real life, what happens? The government will be issuing the bond at a discount. That is, government will be selling the same bond to you at 95 rupees, and you will be getting 100 rupees at the end of the year. But for our explanation of this bond yield, I am taking a very simple example. Now imagine that, for example, you have this bond with yourself, right? And in the next year you expect that, okay, the next year I will be selling this bond for 105 rupees to the government. Now what happens is that maybe for example, in the economy, the private sector is not doing well, right? The private sector is not doing well. For example, there are economic uncertainties, there are wars going on in the country, due to which the public trust in the private sector is going down. And you know that the government bonds are actually the safest way in which investors invest money, because government is always there. After 1 year the government will be there. It doesn't matter if there are huge crises in the government or not. If you have bought a government bond, you are bound to get your principal and your interest back at the end of the year, that is after your tenure. Now what happens is that maybe due to various uncertainties, you see that there is one another investor, maybe that is your friend, who is asking you to sell this government bond for 101 rupees, right? So you do what? You sell it for 101 rupees, right? Now this was you, correct? And this is your friend. Now you bought the bond for 100 rupees. If you would have kept this for 1 year, you would have gotten 5 rupees more. Now in layman terms, whenever we are talking about the final return that you get from a bond, that is actually known as your yield, right? This is your bond yield. When it is with you after 1 year, it will be giving you a yield of 5%. So generally when we talk about the yield, it is actually the total returns you get. It is actually the total returns that you get, right, divided by your buying price, right, divided by your buying price into 100. So this will be giving you a figure in percentage. So this is the total return divided by the buying price. When we talk about your yield, it is 5 rupees divided by 100 rupees that you bought it for. So it is giving you a yield of 5%. Right? Now let us talk about your friend. your friend panicked by the market conditions. Right now also you can see the stock market is crashing like anything. So your friend is telling that, okay, I do not want my money to invest in the stock market anymore. I want to invest in the safest investment ever. No, that is not gold here. That is the government bond, right? So when we talk about safest investments, it depends on the investors, right? It can be gold for you, it can be government bond, but since we are discussing bonds here, I'll be taking the example where your friend has bought the bond for 101 rupees. Why 101 rupees? Why not 99? Because when you are a bond holder right now, you are holding that safe asset which everyone else in the market would also want to hold, right? So that is why your friend is offering you one incentive, that you take 1% extra, 1 rupees extra, and you give me the bond, right? Because your friend is panicked due to market conditions. But we have to understand, at the end of the year, how much money your friend will be getting. Is it 5% on 101%? No. Government has told that I am issuing a bond of face value of 100 rupees, right? Face value is 100 rupees, this is fixed. On this I will be paying 5% more, right? But your friend has bought from you, not from the government, right? It has bought from you for 101 rupees just to give you one incentive to sell it to him. So you instantly get 1% profit, while you could have held it for 1 year, but you just got it, before that particular time. But your friend, he actually tries to, hold the bond for 1 year, and at the end of the year, how much money the friend is getting? The friend is getting 105 rupees, right? And what is the total return that is getting minus his buying price? That is 101 rupees. So he got a return of 4 rupees. If you would have held it till the end of the year, you would have gotten 5 rupees. He got 4 rupees because he purchased it for 101 from you. Now in this case, you tell me what is the yield. Simply we'll be using this formula. So what is the total return here? We got the total return as 4 rupees divided what is the buying price. The buying price was 101 rupees, right? So your friend bought it for 101. The total return he got after 1 year was 4 rupees. So you will be getting somewhere in the range of 3 point something percentage. Earlier, what was it? Earlier 5% yield you were getting, right? Your friend is getting less than 5%. Where you can see here, in this entire scenario, what happened? The bond price increased from 100 to 101. The price increased, right? But the yield decreased. So this is a simple relationship when we talk about, bond price and bond yield. So this is the inverse relationship. This is how price and yield are inversely related, right? So whenever price increases, yields goes down. Whenever price decreases, yield goes up. So we can also explain this in a simplified way. Whenever we have higher price of something, or say whenever some commodities price are increasing, that means that demand and supply are at work. Whenever prices are increasing, we have higher demand. So when we have higher demand of government bond, what it signifies? It signifies more friends like yours who is demanding more bonds from you. That means who is demanding more government bonds from you, who is demanding more safe form of investment, because they do not trust the private sector right now, or say the market right now. They maybe are seeing wars in the country, or external, Donald Trump imposing tariffs on the sector, private sector, or there are many other conflicts that can take place, or say issues that can take place in the country. It can be also the case of high inflation, right? It can be also the case of, say, unstable governments, where generally we find that the yields are behaving in this manner, right? So when we talk about, say, this price increases, yields will be going down, correct? So now we're in a position to understand what the government, bond yield is all about. Next, we'll be also trying to link with various concepts here. Now we know that interest rates are actually, when we talk about, when we actually compare it with the bond price, right? So these are also inversely proportional. Interest rates and bond prices are inversely proportional. That means whenever we have higher amount of bond prices, correct, the interest, the interest rates will be going down, and vice versa. Now when we know that if the bond prices are increasing, correct, when the bond prices are increasing, we saw that the yields are decreasing, right? And also when we know when the bond prices are increasing, interest rates also will be decreasing. Why? Because of this inverse relationship. Bond prices and interest rates are inversely related. So that is why we also find this inverse relation with this bond yield and the bond prices, due to which we find that whenever interest rates goes up, the bond yields also will be going up, right? And whenever it is goes down, the bond yields will be going down. So this is the link between bond yield and your interest rate. Now when we are going to discuss this relationship between bond yield and stock markets, this is a very simple thing to understand. Consider, imagine that the bond yields of the government bonds are increasing, right? Now what happens in this case, what you would understand that right now the absolute return on government bond is actually more right now. So people will be, going to say the government bond markets, right? Or say the normal markets, and they will be buying more government bonds, right, than the private equities or the shares which are listed on stock exchange, because they're simply getting higher returns from the government bonds. So that is why, people will be selling equities whenever we have higher bond yields. This is something which we have to keep in mind. Whenever the bond yields will be going up, investors will be pulling out the investments from the stocks and they will be investing that into government bonds which are safer. Correct? So this is actually also brings us to this conclusion that whenever we have this particular, say, bond yield rising, so if they're selling equities, the stock prices will be going down, right? So this is also inversely related, that whenever bond yields go up, the stock prices goes down because of the selling pressure of the people, because they sell the resources to buy more bond. Now, what is the link between government bond yield and borrowing cost of the government? Now imagine, for example, that the government bond yields are increasing, right? That means if the government bond is right now having a yield of around 7%, right, and it has increased to 8%, and on a separate day, on a separate occasion, the government wants to build a new bridge and the government needs around 100 crores rupees. Now the government decided, okay, now I will be not spending from my own money, I'll be raising money from the people, I'll be taking a loan from the people, that is government bond, the money that the people will be paying for the government bond for 1 year at an interest rate of, say 7%. Correct? Now, do you think that the government, the people in the economy, they will be, giving the money to the government? Because already they are getting higher yield in government bonds, that is the previous government bonds. Now, in the new government bonds, if the government is keeping the interest rate at 7%, no one is going to buy that government bond. So government, if it wants to borrow money from the public to build anything or say for any finances whatsoever, right? So they need to offer higher interest rates or say higher returns, that is more than 8% in this case, for example, right? So this is where you have to understand the government maybe will be giving these at 8.5%. That is only when the people will be, interested to invest. So this means that the borrowing cost of governments is going up. So borrowing cost goes up because of higher bond yields. Correct? So this is what we have to keep in mind. Also, when we link government bond yield with FPI, foreign portfolio investment, imagine a situation when the government bond yield in the US, right, in the US is higher than the, Indian government bond yields. So what the FPIs will be doing, FPI people are very, they do not have any attention, they do not have any patience. So wherever they will be getting higher returns, if they are seeing that, okay, government bond yield in the US is much more higher, they will be pulling all of the money from India and they will be investing in the US. So this will be leading to rupee depreciation, right? If they are pulling all of the money, they will be dumping Indian, money, in our country. It will be increasing the supply of Indian rupees, hence causing depreciation, right? Also, when we talk about this will be creating, whenever we have high amount of FPI pullouts, so this is generally attributed to higher yields abroad. Correct? So this is how we can understand the various dynamics when we talk about interlinkages of various concepts here, right? So comprehensively, this is how government bond yields work. Now we'll be looking into what are the factors which are causing the recent decline in the 10-year Indian government bond yields. As you can see here, from December 31, the government bonds are at quite low, and again at, in January 16 onwards 2025, the government bonds have actually decreased. The yields have generally decreased. Now, I want all of you to keep in mind that for a, emerging and growing economy, that means the economy is having low inflation, a steady GDP growth, right? The GDP growth is all fine. So generally the government bond yields are low. So generally when we have the government bond yields at a lower rate, that means people are investing more in the private sector. That is generally the equities. We can understand this, right? Because whenever we, for example, a particular investor has to make an investment choice. For example, you have 100 rupees. Now you want to invest this money in two ways. One option is the government bond, which is giving you an safe interest rate of 5%. One is private equity stock. One is a private company stock, which is giving you a return of how much? Around 8%. Correct? So that is how we can understand, we can make the investment choice of investing in the private markets. Now, if the government bond was even, for example, at 7.5%, which is a little lower than the stock, the people, even you would want to consider investing safely in this government bonds, right? Because, private sectors are quite risky to invest in. Tomorrow the company may not be there, but you can get the same at 7.5%, you sacrifice 0.5%. But that is what I want to highlight, that in an emerging economy, if the government bond yields are low, that is a good thing. That is not a bad thing, because people will be then interested to invest in the stock market, or in IPOs or in various other opportunities where people can get better returns. And why it is good? Because the private sector, they can take your money and they can expand their branches. They can open more branches of their company. They can purchase more land. They can actually hire more employees and pay more wages. So all of this, they will be doing what? This will be increasing the GDP of the country. This will be helping in further growth of the country. So this is why falling government bond yields are a good signal for the private sector development. Otherwise, if the government yields are too high, the private sector have to offer higher returns, which is sometimes not possible for them to give, right? So this is where we have to understand, why emerging and growing economies, if they are having lower yields, that is a good sign for them, right? And here, what are the various factors which is actually causing this particular a decline in 10-year government bond yields is because of our robust economic fundamentals. Inflation is down, inflation is a stable rate. Also, when we talk about the interest rates are actually also quite manageable as of now, from an RBI or monetary perspective, because RBI have dealt with inflation with quite sagacity to combat various inflationary pressures in the country. So this has also led to the controlling of the government bond yield rises, right? So these are actually what we have to keep in mind, because there have been so many questions regarding government bonds in the PYQs. So that is where we can apply some of the concepts we just learned in this particular question. So let me know what is the answer in the comments below. Recently, the Prime Minister has launched the Bima Sakhi Yojana. This is an very important government scheme which is launched in partnership with the Life Insurance Corporation of India, that is the LIC. Now, what is this all about? This is a very innovative scheme, very important and innovative scheme to have the women empowerment agenda on board. Why? Because here, women in the age group between 18 years to 70 years and those who have passed class 10, they will be given specialized training on insurance products of the LIC. So this is actually a scheme where around 1 lakh women who will be known as Bima Sakhis, right, or the friends of the LIC, where they will be helping to spread insurance in the country, right? That is where we have to understand here. This aim is to promote insurance in those areas of our country, and also the goal is to have at least 1% insured in every panchayat. So this is the goal, right? So here this particular initiative will be possible with a specialized training, where in the first 3 years they will be given training and a stipend, right? Training and stipend will be given to those Bima Sakhis, and here the stipend amount will be ranging from 7,000 in the first year, 6,000 and 5,000 in the subsequent years. And here, after completion of this particular training, here, the women will be helping the LIC, to enroll various, say, candidates or various, say, potential clients. But this will only be possible after they pass a particular examination. After they pass an examination, after which they can actually join as a development officer, at the post of development officer in the LIC. So you can understand, starting from 18 to 70 years, the women who have passed class 10, they can get training for 3 years, stipend, right? And also gradually they have to pass various examinations, and they can become development officers for the LIC. So this will be promoting not only women empowerment, but also this will be leading to better amount of financial inclusion in the rural areas, where the goal is to have at least 1% insured in every panchayat of our country. So this is everything that you need to know regarding this particular initiative. After this, you please let me know what is the answer of the same in the comments below. RBI has allowed UPI based credit lines for small finance banks. So here we'll be covering firstly what are small finance banks, then I will be going to discuss about what the entire initiative is all about. So small finance banks are, for example, we have Ujjivan, Janalakshmi, we have Equita, small finance banks. So these are actually one of the kinds of differentiated banks. Differentiated banks. Now these banks are generally for the unbanked and the underbanked sections of our population. That means there are some peoples in the country who are unbanked. That means they do not even have bank account, right? They do not know even how to keep deposits and so on. They do not have ATM cards or deposit cards and so on. So we need better amount of financial inclusions among them. This can be people such as migrant laborers, landless laborers in the rural areas. We also have so many sections of the population such as say women who are deprived of her own bank account, or say students also who do not have bank accounts as of now. So we need better amount of financial inclusion among the unbanked sections of the population, for which we have a particular type of bank known as payment banks, right? The small finance banks also serve their purpose, but generally the payment banks are serving the purpose of offering basic banking facilities such as deposit taking, right? Then you can use functions such as money transfers, right? Doing basic banking facilities. Now in the comment section, can you let me know whether payment banks can actually issue loans to the people or not, right? So you let me know. But apart from that, we have another bank which you know as small finance banks. These are targeting the underbanked or say unbanked people also, but mainly their focus is on uplifting the underbanked people. This can be actually some, say, small farmers, small and marginal farmers, MSME owners, right? Generally people who have bank accounts, but they do not fully use the banking services, generally the credit services. So that is why the small finance banks becomes very and extremely important when we talk about their facilities here. So they are regulated by the RBI, and also we have to understand they are registered as a public limited company under the Companies Act of 2013, right? And they are generally like corporate entities only. They are private sector owned, and they can do almost every function such as commercial bank is entitled to do, but they are generally operating on a much smaller scale. So generally what happens is that on the process of becoming a bank, generally they firstly become a small finance bank, and after expanding the business and reach, they can apply for say various bank licenses later on. But generally with reference to when we compare them to commercial banks, their various banking facilities and infrastructure are at a lower scale. But when we talk about the interest rates, particularly FD or say various other savings interest rates, they are actually higher than the commercial banks. Why? Because they want more customers, because they want to expand their business over a period of time, right? And here when we talk about their services, they offer basic banking facilities, almost all of the banking facilities, such as extending loans, accepting deposits, giving credit cards, right? So these are all the general functions that banks do. They can also do the same, right? And also when we talk about their own target population, their target populations are the underbanked people who generally rely on, for example, these people, they generally rely on the informal banking sector, such as money lenders, friends, relatives, and so on. So these people generally lend, actually borrow money from the money lenders who charge exorbitantly high interest rates. So that is why, to cater to them, we have the small finance banks to cater to these entities. And when we talk about them, when we talk about these peoples who are say the potential beneficiaries of the small finance banks and their say various facilities, small finance banks must be giving 50% of their loan portfolio, right, to these people, right? How? Because the RBI has said that your function, the small finance bank's function, is to extend more small loans. Small loans are generally to the tune of up to 25 lakh rupees. Imagine a small MSME factory who would require a loan for buying equipments and various say rental purchases and so on. So that person would not be requiring loans to the amount of 5 crores, 6 crores. That person can be requiring a loan of 5 lakh rupees, 10 lakh rupees, and with that the person can run their say operations. So generally the MSMEs and farmers and these entities who are the underbanked sections of the population, they do not require huge loans. They require small loans only, loans up to 25 lakhs. So the small finance banks must be giving for 50% of their loan portfolio to the these underbanks sections, right, up to the rupees of 25, right, lakhs. And here when we talk about the say small finance banks and the activities they have to do with reference to priority sector lending, or the sectors which are of high priority for the country, such as farming, for farming, say startups, women empowerment, renewable sector energy, and so on. So for all of these activities, 75% of their funds, of their loans, must be going to the priority sectors. And also they have to have a proportion of their branches in the rural areas up to a period of time, right? So this is where we have to keep in mind the various details of small finance banks. And now we are in a position to understand why this particular initiative has taken place, or extending credit lines to the various underbanked sections of the population. Now imagine there is a shopkeeper, right? Now you would agree with me that the shopkeepers require small loans, right? Or say for example, if here is Ramu for us, right? Ramu does what Ramu generally say purchases on a monthly basis, raw materials and all of the say business need or say goods and services that he has for 10,000 per month. That means these are all the shop supplies he needs to purchase in 1 month. Now, for example, this is the month of Diwali. Now, Ramu expects that obviously in the month of Diwali, he will be selling more items and more profits. So, on the months of Diwali, he may be purchasing 5,000 rupees more worth of various goods to be sold at his shop. So where will be this 5,000 rupees coming from? Maybe Ramu will be taking a loan from a money lender, but money lender will be telling that you have to give me 15% interest on 5,000 rupees. So Ramu will be very sad, right? Now what else Ramu can do? He can actually take a loan from a bank of 5,000 rupees, right? So this loan again will be charging him interest rates, maybe at 12% from a bank. But what here is now possible is that Ramu can actually now get a credit card, right? Now credit lines can be possible for him. Earlier also he could have gotten credit card from the small finance banks. But right now he will be getting what we know as a UPI credit line, right? For example, this 5,000 rupees extra worth of shop material is maybe purchased from another shop, maybe from a wholesale mandi, right? So what happens, Ramu goes there with his smartphone and he opens the UPI app and he scans there, and he is using the credit line given by the small finance bank here, right? So what happens, the small finance bank is actually having Ramu's account here, correct? Now after analyzing Ramu's bank accounts and also looking at his general daily sales, monthly sales, yearly sales, the small finance bank has agreed that okay, I am giving you 50,000 rupees of credit line. That is almost like a credit card facility that the bank is giving. So with reference to this, the bank is also giving a credit card that whenever you need to purchase any item, you just open the UPI app on your phone, you just make the payment, and for whatever payment he is making within 50,000 rupees, he has to pay this back, or this 5,000 rupees back within 30 days. Within 30 days, within 30 days Ramu did not pay any interest. So this is exactly what we mean by credit line. For 30 days you have a credit line of 50,000 rupees. You can use 1 rupees, you can use 5,000 rupees, you can use 50,000 rupees, but within 30 days you have to pay back the money, right? Or else you will be charged a nominal interest rate on the outstanding amount. Just the same mechanism which happens with reference to credit cards, right? So this is what happens, this is what is happening there. And at the end, when the Diwali month will be over and maybe Ramu is having a profit of 30,000, 40,000 rupees, so out of that he will be paying the same to the bank. So this is what is happening, and this is a very good initiative at promoting financial inclusion in the country, because people like him, people like many other underbanked sections of the population, they did not take any loan, they did not go to money lenders or informal sector, they can only simply use UPI transactions by a credit line given by the small finance bank. So this is a very innovative thing that RBI has done, and these are some of the things that keeps our country in the top ranks when it comes to the financial inclusion measures. So with reference to this, you let me know what is the answer of the same in the comments below. Now recently, the Ministry of Consumer Affairs, Food and Public Distribution has launched the credit guarantee scheme for e-negotiable warehouse receipts based pledge financing. A very long topic, right? A very long title here. But here what you have to understand is that this is a corpus of 1,000 crore rupees, where the main target is to help the farmers harvest their produce and to reduce something which we know as distress selling, right? So we do not want the farmers to sell their crops at whatever prices, right? Because we want our farmers to get a justifiable price and a very, say, remunerative price for their produce. That is why we do not want them to panic and sell in the market. That is why we have devised a mechanism here, apart from the various other mechanisms such as MSP and so on. MSP is also one mechanism where the farmers, such as him, is trying to get fair price for their produce. But here we are not talking about MSP. Here we are talking about something which we know as negotiable warehouse receipts. Now imagine that we have a farmer here, right? Now our farmer here has grown various crops, and after growing the crops, harvest is done. The harvest season is done. Now what the farmers have the options here? Firstly, the farmer can sell the crops at MSP, correct? Now maybe the farmers are not getting, you know, proper MSP prices, because maybe in his village the MSP is not implemented very well. Now what is happening? So this is one option that is available to him. The other option is selling to the private markets, where generally, you know, maybe the farmer is requiring immediate money for the next season's crop, right? For example, the total value of the entire crop is, you know, 1 lakh rupees, right, in this particular season. Now for the next season, the farmer will not be keeping the field empty, right? So next season the farmer will be requiring, say, maybe 50,000 rupees to buy seeds, fertilizers, and maintaining and giving the salaries to the various laborers and so on. So that is where the farmer needs money also here. So immediately, for the next season, the farmer is needing money from here. But maybe the farmer is not being able to sell the crop which he has harvested right now. So what the farmer can do right now? The government has told that you should not be selling it in a, say, any haphazard manner. That is known as distress sale. That is, for the next season you need money, but you're not getting money from your present crop. That means at whatever prices you will be selling it. So this should not be the thing. Because the government has came up with this initiative, and this is not only in our country. This is something which is practiced in almost all of the countries, that there will be a warehouse where you bring this 1 lakh worth of your harvest. You store it there. In return, the warehouse owner, this can be the government warehouse, private warehouse, certified by the government, right? The government here will be giving you a receipt like this. If you can see, this is the receipt which is known as negotiable warehouse receipt. So what is this receipt all about? It is talking about, say, your name, right? The farmer's name will be mentioned here, right? What the farmers is, for example, supplying. For example, the 1 lakh rupees of wheat is maybe 100 kilos of wheat, right? The farmers is supplying, right? What is the total rate here? The total rate is 1 lakh rupees. What is the date? For example, the farmer has, harvested it in March, right? And the wheat will be having a shelf life of maybe a couple of months. So till that, your receipt will be given, by the warehouse authority to the farmer. Now this receipt is a piece of paper, right? But it is worth 1 lakh rupees. And the farmer can show this receipt to anyone and say that, see, I have this receipt. That means I have 100 kilos of wheat stored in a warehouse. This is the same thing. The receipt and the wheat right now is the same thing for the farmer. And we were discussing a scenario, right, where the farmer needs immediate money. Now what will be the farmer doing by only storing the grain here? He needs money, right? So he is doing maybe the opposite thing, right? But no. What he is doing, he is actually storing this 1 lakh in this warehouse, or 1 lakh of wheat in this warehouse, and he has gotten in exchange this warehouse receipt. Now what is happening here is that this particular receipt the farmer can show to a bank, right? So he can go to a bank and show that, see, I have this 1 lakh rupees worth of saman in the warehouse, so you give me 50,000 rupees of loans, right? You give me a loan of 50,000 rupees. So what is happening here? The farmer is not selling the crop, right? The farmer is not taking a loan from the bank without anything, right? Because this is a collateral or security of the 50,000 loan that he is taking, right? And also this particular certificate or whatever you see, the receipt is safe with the farmer. So maybe in the next season the farmer is getting some profit, or from various other sources from where the farmer is earning various other incomes. From that money the farmer can pay back the loan of 50,000, and then the farmer will be getting back his wheat, and later it can sell it at MSP at any other price that he is wanting. So this is what is happening, that in the middle the banks can take your negotiable warehouse receipt as a collateral, right, as a collateral or security, and give you the loan. Till then you can use the loan to again do your farm related activities, right, or various other activities, and at a later date when you pay back this loan, the bank will be releasing your wheat or say your produce, which you have actually stored it under warehouses. So this is exactly how the negotiable warehouse receipt is working. So what are the benefits here? Firstly, the first benefit is that the farmer is having income security, right? Because based on his own produce, he is getting loans, he is getting various financing options. Also, the farmer is getting say storage option, a storage option in which the agricultural produce is not getting wasted. All right. Also, this is preventing distress selling. Sometimes when the farmers do not get MSP prices, they sell at whatever prices. So this is also stopping that. Correct. And also when we talk about the next benefit, it is helping in the formalization of agricultural credit. What I mean by this is that it is bringing the farmers into formal banking sector, not into the informal sector such as money lenders and so on. So the farmers can directly avail the benefit from the banks here. So these are some of the benefits of the negotiable warehouse receipt. And generally here when we talk about the negotiable warehouse receipt, this is having a statutory provision of how this particular scheme was launched in 2011, and we have the Warehouse Development and Regulation Act of 2007 for the same, right? So here the farmers can actually transfer the ownership of a commodity stored in a warehouse without delivering it physically. Correct? So this is where brings us to the e-negotiable warehouse. This is nothing but can be understandable in a very simple way. When we talk about the farmer, right? The farmer deposits the produce at Warehouse Development Regulatory Organization, right? And here the farmers are depositing it at a particular warehouse. The warehouse man is actually issuing ENWR to the farmer. That is electronically via SMS, via email, via digital certificate. Digital is signed by the government. So that particular certificate is given to the farmer, right? And here the farmer can use that ENWR to request for loans on Jan Samharth portal. So this NWR are compatible with a digital portal created by the government, right, where the farmers can get a loan for the same. So from here only it is an entirely end-to-end digital ecosystem where the application of the loan will be following. The banks will be completing necessary processes such as looking at the warehouse, say storage of the farmer, looking at the background of the farmer, right? And also the bank will be marking with reference to the loan that the farmer is seeking from the ENWR. So this is exactly how this thing is being possible. And when we talk about the pledge financing here, right, that is the credit guarantee scheme, correct? So this is exactly how the ENWR is taken to the next level right now. So here benefits for the farmer under this credit guarantee is that the farmers will be getting easy loans from bank at further lower interest rates, improve access to registered warehouses near farm gates themselves, preventing of distressed sales and better price realization, and boosted income for the farmers. What happens is that whenever the farmer will be depositing the ENWR with the banks, right, the farmers expect a loan from the banks, right? Now in loans or say in banking sector, there is a term known as marginal, right? Margins, right? Margins. That means if you seek a loan worth of 1 lakh rupees, you have to deposit a collateral or security may be of 1.5 lakh rupees, because this 0.5 lakh rupees is a security for the bank, that if you do not pay back the loan of 1 lakh rupees, then the bank can sell your security, right? It can sell the security and get back the money, correct? So this is what we mean by margins here. So whatever the loans the farmers will be taking, for example, the farmer has taken a loan of 50,000 rupees out of the 1 lakh rupees of ENWR. So that means obviously the bank will not be lending more than 1 lakh rupees. Yeah, right, because of the margin, margins that the banks have for various loans. Correct. So under normal circumstances, maybe the bank is interested in giving loans only up to 50% amount of the collateral. But under the credit guarantee, or pledge financing, what happens is now the government is telling that, okay, can you give, for example, you are giving 50% out of 1 lakh rupees of the ENWR value of the, say, wheat in the warehouse. You are giving on a normal day 50,000 rupees. That's good. That's very good. Right? Can you not, as a bank, give maybe 80%? Because maybe the farmers need a little bit of money for themselves, and there is a gap of around 30%. So the government is telling, okay, I can solve this issue by giving this 30% as my, as a pledge. So government will be giving some of the collateral, some of the security out of that 1,000 crore. In the beginning I told that in this particular scheme, government has earmarked 1,000 crore for this particular scheme, that is credit guarantee scheme. So what the government is doing, government is giving credit guarantee of this extra 30% so that the farmers can get a little bit of extra loans for their purposes, for their agriculture purposes. So in this way, a little more of money can be invested in agriculture by the farmers and they can get better incomes. It is good for the country, it is good for the economy, right? And here, why pledge financing? Because the farmers has pledged something such as wheat in the warehouse, right? So based on that, the government is adding some of its own efforts and giving the benefits here. So for, say, loans to small and marginal farmers up to 75 lakh rupees, the pledge can be, the credit guarantee can be given a little bit more, extending the total value of loans to 80 to 85%. That is, if you have a ENWR of 1 lakh rupees, you can get a loan of 85,000 rupees, more than what the banks usually give, right? Also for loans granted to MSMEs, farmer producer organizations, right, that will be up to 2 crore rupees. So that can be covered up to 75%. That excess amount of money that can be given up to 75%, right? So this is a very important thing, that already we are including the farmers in this digital ecosystem via ENWR. Firstly, we included them under, the normal NWR. Later, we transform it on a digital medium. After this, we are giving them further, say, loans, further loan amounts by giving credit guarantee. So we are trying to make the lives of our farmers much more easier by giving them streamlined financial operations and also facilities. So this is exactly what the government is trying to do to reduce the distress sales, better price realization, also easier loans at lower interest rates, right? So this was a very innovative initiative, and that is why you let me know what is the answer of the same in the comments below. The Indian government and the Asian Development Bank has signed a $350 million policy-based loan, or PBL, right, with reference to the SMILE program. Right here, the SMILE stands for Strengthening Multimodal and Integrated Logistic Ecosystem in the country. When we talk about the logistics sector, we talk about the condition, or say the infrastructure with reference to our roads, right, with reference to our bridges, with reference to our, say, railways, airports, seaports, right, all those connectivity measures. We can also factor in the, say, inland waterways too, right? So we have so many ways of transportation, and we know the better amount of transportation of our, say, economy or the logistics sector, the better amount of economic growth it is also going to experience. Generally, the developed countries have higher ranking on the logistics index. Can you let me know in the comments which is the most prominent logistics index and who publishes them? Right now, with reference to this particular initiative, here we have the Asian Developmental Bank, which is partnering with Government of India with reference to Department of Economic Affairs, Ministry of Finance, DPIIT, and the Ministry of Commerce, and also the Ministry of Commerce and Industry, right? As a whole, all of these entities are participating in transforming the logistic scenario of our country, right? So here a programmatic based loan will be given. Here this is actually based into various sub programs where India's manufacturing sector and supply chain sector will be developed. So with reference to boosting manufacture, we know that manufacturing activities create a lot of jobs and opportunities. So we need better amount of infrastructure to have higher amount or higher levels of manufacturing. Also, when we talk about supply chains or distribution of various goods and services, we need a proper amount of logistic, right? We need warehouses, we need good amount of roads, good linkages between railways, highways, airports, ports, right? So these particular connectivities must be improving over a period of time, right? So this is why we understand that the key pillars of this particular program, of this particular ecosystem, SMILE program, is firstly strengthening the institutional frameworks, or say the government regulations, and streamlining them to boost the logistics sector of our country. Also, we need to standardize warehousing facilities across the nation. When we talk about the e-commerce industry depends mostly on the facilities and the better infrastructure of the warehouses in our countries. So better amount of warehouses, storage units, the better amount of, say, inventories a company can have. Also, when we talk about the other aspects such as improving trade logistics and promoting smart low emission system, these are also important pillars. So for our prelims examination, UPSC can actually ask us what are the important pillars of the SMILE program, or simply who are the various players who are involved or stakeholders who are involved. So from this perspective, we need to keep in mind this information. You let me know what is the answer of the same in the comments below. In recent times, we see that the real effective exchange rate of our country is increasing. Now this is after bond yield, in my opinion, a concept which is troubling a lot of students. Let me again try to simplify it for all of you. When we talk about real effective exchange rate, we cannot ignore the basics. The basics, firstly, we need to quickly recap our understanding of what are exchange rates. In our NCRTs, we see this figure. On the x-axis, we have foreign exchange, such as we will be taking the example of dollar. That is, the supply of dollars. That is how much the supply of dollars in our country is at real levels. On the y-axis, we have something which we know as the exchange rate, which is denoted by E, right? Which is nothing by, or what is the rupee is to dollar, the value of the rupee to the dollar. Now, with reference to this, when we compare the demand and supply, right? For example, this is a demand of dollars in the country, because we are talking about, forex reserves with reference to, or say, forex, supply with reference to dollars. That is why demand curve of dollar and supply curve of dollar. Now, this is what we understand by basic exchange rate. That is, whenever we have equilibrium, or say the point at which demand of dollars is meeting the supply of dollars in the country, that is actually determining the exchange rate or equilibrium exchange rate in the country, right? Now what happens if the demand of dollar has increased to this much? So definitely we understand that the exchange rate has increased. That means the demand of dollars have increased. That means the demand of dollars have increased proportionate to the demand of dollars, the demand of our rupee. That means, more people will be demanding dollars and be buying dollars in our country, but buying dollars with what? With Indian rupees. So this will be leading to more supply of Indian rupees than the demand for rupees. So this is why this will be causing depreciation in India with reference to rupees. If at all, at any time we see higher demand of dollars. So definitely when we mean there is an increase in the exchange rate in this manner, according to your NCRT, it means whenever we see an increase in exchange rate, it means a depreciation of our currency. Whenever we see and decrease in the exchange rate, it means an appreciation of our currency, and totally the opposite with reference to dollars, right? That is, it will be leading to appreciation of dollars, and this will be leading to depreciation of dollars, right? So this is how we are comparing exchange rate between dollar to rupee. We can do the same thing with reference to dollar to won, dollar to pound, dollar to any other currency that we want. So this is how exchange rates work. And here, the thing that we have discussed here is also known as nominal exchange rate. Why? Because here we are not talking about inflation. In real life there is inflation, but right, for example, in India generally we have higher amount of inflation than the US, so we can see the effects of inflation much more greater than the dollar. So when we talk about nominal exchange rate, and we can factor in the inflation, we can adjust inflation, so then we get something which we know as real exchange rate. Please keep in mind that nominal exchange rate and real exchange rate is only talking about two currencies always. It is either rupees to dollar, it is either rupees to pound, rupees to any other currency we want. So we will be having only two currencies here. But when we talk about effective exchange rate, when we talk about effective exchange rate, we mean that India is not only trading with US, right? India is trading with Southeast Asia, India is trading with China, India is trading with the European nations. So it is unfair for us to only calculate, currencies in one currency only. So India is actually trading with so many currencies. That is why cannot we have a weighted average of exchange rate, a weighted average of currencies with which India is actively trading with which India is actively trading with, right? For example, say in our case we have a basket of 6 currencies, 40 currencies. So these are those currencies or those nations with which India is trying to actively trade, such as US, Japan, Germany, and so many other countries, right? So for them, right, we have thought of creating a combined basket, right? So for them, we'll be calculating the percentage of our trade with a country A, then we'll be again calculating the weightage with reference to country B, then we'll be calculating our a total trade with currency C. So based on this, we'll be calculating this particular numerator, and we'll be dividing the value with reference to our Indian rupee. So definitely when we mean effective exchange rate, we are not taking only dollar to rupee. Maybe we are taking here dollars, maybe we are taking here euros, right? Maybe we are taking here pound sterling, right? And all other major currencies here, and then we are looking into the value of our Indian rupee. So it is nothing but exchange rate only, but combining so many other currencies with reference to our rupee. If we calculate the value here, then we get something which we know as nominal effective exchange rate, or NER, right? This means this is not nominal exchange rate, this is nominal effective exchange rate, because this is the actual exchange rate which is telling us what is the value of a basket of all other currencies with reference to our rupee. So if tomorrow someone tells you that the situation of India is very serious with reference to the heavy depreciation we are facing with dollars, but you can tell that maybe rupee is depreciating against dollar, but maybe rupee is not depreciating against all the currencies, right? So because we have to keep in mind the nominal exchange rate, but please also do keep in mind that this particular value is including the inflation value also. So if I adjust inflation here, we'll be getting what we know as real effective exchange rate. So real effective exchange rate is calculating into what is the real scenario or say real value of currencies without inflation feeding into, because we know we have inflation in India, we have inflation in the US, in the Europe, in UK. So if we adjust for inflation, we'll be getting the true value of a currency. That is a real effective exchange rate. So these are the things that we have to keep in mind, the basics we have to keep in mind with reference to this. Achha, now we can understand that if we have, an increase in need and also read, right? Because need and read is based on the same formula, right? The just difference is that, we do not have inflationary value in the read calculation, right? So if I talk about that, if there is increase in the value of need, that means it is an appreciation of our rupee, correct? It means that our imports will be cheaper, our exports will be expensive. If we see the opposite side, if it is a decrease in need and read, we have depreciation of rupee. Why? Because you have to understand here, does the opposite thing is happening with reference to exchange rates, so nominal exchange rates and real exchange rate. For example, whenever we talk about exchange rate according to our NCRT, it is rupee to dollar or any other currency, right? But for the purpose of calculation of need, it is with reference to foreign currencies, right? All of the weighted averages of foreign currencies with reference to our Indian rupee. So in exchange rate calculations, if we have had increase in exchange rate, right, generally we have seen that this is a condition of depreciation. If we see an increase in need and read, it is the opposite of that effect, that we have an appreciation, just because the thing here is inverse, right? So this is a thing we have to keep in mind. If there is an increase in both read and read, we see appreciation, and appreciation will be making your exports much more expensive for the other countries, right? So this is what we have to keep in mind for our concern. And here when we talk about, say, the reason for divergence, as we can see here, right now what is happening is that on one side we have heavy depreciation against dollar. In recent time we also have depreciated against the pound, against the euro, right? But here we have to keep in mind one simple thing, that if we are seeing depreciation in nominal exchange rate against dollar, against individual currencies, but on the other hand, if you can see here, in recent times the read value is increasing. That means on one side we are saying that our, say, exchange rate, if you can see here, it is depreciating. That means our exchange rate is increasing. That means rupee is depreciating, correct? Exchange rate is increasing, rupee is depreciating, that is nominal exchange rate is increasing. On the other side, our read is also increasing. This is a, say, dichotomy, right? Because again I want to remind all of you, exchange rate increase means depreciation, because we are calculating the value of rupee is to dollar. So if this increases, we have depreciation. If we have increase in need or read, we have appreciation of rupee, right? Because we are calculating the foreign currencies with reference to Indian currency value, right? So this is what is the thing here. On one side we see exchange rate is increasing, depreciation of Indian rupee. On other side, in real terms, in real terms, after calculating inflation, we see that rupee is appreciating. So what is the effect here? It is the effect of inflation, nothing else. Because we see that with reference to all of the foreign currencies here, with reference to dollars, with reference to, say, euro, with reference to pound, with reference to any other currency, generally the developed countries have low levels of inflation, right? They have low levels of inflation compared to India. So if inflation is higher, the gap is increasing in this way, right? So this is actually the reason why we find a divergence in this particular value, right? And that is why the RBI is also seeing that in recent times rupee is depreciating a lot against the dollar, but RBI is letting it to depreciate because our currency right now is overvalued. If we talk about the read value, any value above 100, signifies that the currency is appreciating, or whenever we see appreciation, appreciation generally means overvalued currency. That is, our rupee is overvalued in near terms. That means our inflation is higher. That means if our inflation is higher, consider this simple example. If there is a smartphone which is, for which the cost of production in Europe is $200, right? And in India also is, it is $200. But due to inflation in India, the cost has increased to $220. Now you tell me that, due to inflation in India, right? So, the EU people will be demanding more of their smartphone, not our smartphone, right? That is why due to inflation, we have made our say exports much more expensive. But it is whenever we have rising, our currency is appreciating, that is making our imports cheaper too. But our ambition here as a country, developing country, we need greater amount of exports. So this is why RBI is also letting the rupee depreciate a little more, correct? And here RBI will be also taking various actions via its monetary policy to correct this phenomena. So we'll be seeing what is happening in the later days, but here the main concepts were this, and that is why after this comprehensive discussion, let me know what is the answer of the same in the comments below. The Prime Minister recently laid the foundation stone of the Ken-Betwa river linking project. Now this is actually a broader framework under the National Perspective Plan, which is actually for interlinking of rivers, which were prepared in the 1980s. Now here, this is a very significant project for the country because it is trying to interlink the rivers in this region, as we can understand. If we can look at this map very closely, this is the state of UP and Madhya Pradesh here, right? So this is where we can understand that we have two rivers flowing here. We have the river Ken here, which is flowing from this region, and on the other side we have the Betwa river. Now, if we all are following the news, we all know that this region of Bundelkhand, this is highly prone to droughts, less rainfalls, and this leaves less amount of drinking water and also water for agricultural purposes. That is why we have a perspective plan, we have a plan to interlink the rivers here, that is linking the Ken with the Betwa river by building a canal. By building this canal, here we can have a proper amount of infrastructure between the two rivers, and this is the mega river interlinking project. Now here, what are the things we are trying to do here? Firstly, we'll be building a canal, we'll be setting up a dam, that is the Dhaudhan dam here, correct? And we'll be having so many projects here, apart from a reservoir to store the excess dam water here in this region. So what is the main thing here? It will be generating irrigation, say, facilities for these areas, right? Because this canal will be trying to promote major or say minor sub canals later, and also it will be helping us to generate hydropower from the Dhaudhar dam here, and also this will be creating facilities for drinking water. So this is actually a project which is consisting of around 218 kilometer long main canal to transfer waters from a little upraised Ken river to the Betwa river, where we have a surplus water of around 1714 million cubic meters of water, right? And here we can understand this excess amount of water will be helping to have the facilities for drinking water for 1.4 million people in both of the states. Also, both of the states of Madhya Pradesh and Uttar Pradesh, they will be getting equal share of water for irrigation. The district's name is important here: Chhatarpur, Tikamgarh, Panna, and in UP we have the Mahoba, Banda and Jhansi districts. So these are the districts which will be getting benefits of water of irrigation, right? And here if you can see, around 6.35 lakh hectares of land will be getting water for irrigation purposes. Also, when we talk about, say, the other impact of this project, we see that forest land will be inundated. We have here a very important tiger reserve, that is the Panna Tiger Reserve, as you can see here. We are actually trying to link the river starting from the Panna Tiger Reserve itself. Now for your mapping purposes, everything is important here, right? So please do keep in mind the mapping thing, right? So here we are linking the two rivers here by this canal, and the linking activity will be releasing a lot of water in the region. So that is what we have to keep in mind when we talk about the positives and negatives of the project. Firstly, let me show you the broader proposed inter-basin water transfer links. So here we are having a target of linking around 25 to 28 rivers consisting of both Peninsular and the Himalayan rivers. As you can see here on this map, we have various Himalayan rivers shown here, and the various peninsular rivers shown here, which we are trying to have a river links with. For example, we are linking the Ghagra river with the Khasi river, cutting the Ghandak river. So this is actually transferring the excess surplus water from one river to the another. So it will be for the greater benefit of the people, and also it will be good for the agricultural productivity of the region. So this is what we have to keep in mind with reference to our river linking projects. So firstly, when we talk about the positives here, the very first positive is that it will be providing drinking water to the region, right? It will be providing sustainable power, sustainable and clean hydropower to the regions, right, which are developing these particular activities, because we have the Dhauladhar Dam in this region. Also, this will be helping mainly in irrigation purposes, because particularly you can give the case studies of Bundelkhand region, right? Bundelkhand region is a very drought prone region in the country, and if we can benefit from drinking water and irrigation, nothing better than that. And also over a period of time, we can also have better infrastructural activities by participation of the greater private sector in the region, because of the easy amount of water that is available. And obviously it will be good for the overall benefit of the country. That is, it will be helping rural development, it will be helping the overall economic status of the country, including improving the livelihoods of the peoples. But there are various concerns, right? There are various concerns. Firstly, we have seen the case case study of the Aral Sea, where due to various river linking projects and due to various exploitation of the rivers that was flowing into the Aral Sea in the Soviet Union, the Aral Sea has shrunken over a period of time. So the effects, uncalculated effects of river linking is still not available in the public domain. There needs to be more and more our scientific research. Second, the biodiversity of the areas are also at stake, be it the Panna Tiger Reserve, right, where almost it is estimated that 30, 40, even 50% of the tiger reserve can be inundated with water, and it will be leading to a loss of habitat for the tigers, and it will be also concentrating the tigers in a closed space, increasing the competition and increasing the competition, and maybe a reduction in the prey base also. So if we talk about tigers in the Panna Tiger Reserve, tigers are keystone species. Conserving them is equivalent to conserving the tiger reserve or natural ecosystem there. It will be causing a concern. Obviously, when we talk about river interlinking project, we are talking about land acquisition, and whenever we are talking about land acquisition, there are various issues with reference to that. Firstly, with reference to rehabilitation of the people who are resident there, because we have to create a river link, due to which we have to displace a lot of people. So how to rehabilitate them with reference to various buildings or various facilities built to be built for them, or with reference to compensation for the land acquisition. For the same, we need proper market value. We need to keep in the Land Acquisition Act, right, of 2013. So based on this also, the local people are complaining that the compensation value is far less with reference to the project here, right? So these are the various issues with reference to the local people there. The next issue is with reference to the tribal populations and their say displacement and with reference to their traditional activities in the region, right? And also the broader aspect or say that research of interlinking projects have not been done yet because of the heavy amount of costs involved. Now river interlinking project is a very costly affair in this particular aspect. It is costing here 44,000 crores, 44,605 crores. So this is a huge amount of public money which will be spent, while it is for the overall developmental purpose. But keeping in mind all of these issues and concerns, we must be again trying to rethink the purpose of the same, right? Also, when we talk about the hydro projects plus the building of dams, correct, the maintenance of the same is also one issue because of the lack of skilled say people in the region with reference to hydro sectors. With reference to any excessive or deficient rainfall and mismanagement of the dams, there can be even much more serious issues such as flooding or say damming of the region with water. So these are the various issues we have to keep in mind for this interlinking project, right? And with this, you let me know what is the answer of the same in the comments below. The RBI has constituted an 8-member committee of experts to develop a framework for responsible of ethical enablement of artificial intelligence, that is free AI. Now UPSC loves asking us questions. For example, what is the term free AI is related to, and they will be giving you A, B, C, D options. So there you have to select what is this all about, right? Or say who is behind this particular activity. So here we have Professor Pushpa Bhattacharya, who is actually the chairperson of RBI's free AI committee. So here RBI has launched this high level committee to actually look into how we can leverage AI within the financial sector, that is within the purpose of financial sector in our country, right? Or also with reference to money and banking in the country. So firstly, we have to keep in mind that AI is a technology which has the potential to be used in various sectors of our country, right? And also when we talk about say AI, free AI framework here, this particular committee will be looking into the feasibility of adoption of AI in the country with reference to financial services, right? Also, the committee is proposed or tasked with reference to listing the various risks associated with AI in the nation, with AI in the financial services, right? So with reference to any risks, the committee is expected to give some evaluation, mitigation measures, monitoring framework, alongside the same. It has also recommended to propose a proper amount of structure which will be helping in governance of the AI mechanisms within the financial sector. So that is why an expert has been brought in to actually factor in this particular objective. With reference to this, you let me know what is the answer of the same in the comments below. Now in the next one, the Department of Biotechnology has launched an anti-pesticide suit, as you can see here. So the farmers, our own farmers can help, can be actually assisted with this particular suit, because this here is a suit to shield farmers from pesticide sprays. And this pesticide sprays claims a lot of life and is actually seen as a danger for the right to life of the farmers here. Right? That is why the Biotechnology Research and Innovation Council, which is at Bangalore, and the Safio Health Private Limited, a private organization, has launched this particular suit, which is actually using various materials such as a fabric cover made of oxime fabric that can chemically break down any common pesticides which are actually sprayed with reference to any ineffective sprayed of the fertilizer on the soils. So this is how this is priced at 4,000 rupees 4,000 rupees. It is actually quite expensive right now, right? But this suit is washable, and this suit will be actually be used, can be used up to 2 years with around 150 washes. So that is why we need to keep these things in mind, right? And obviously we know, understand that this particular suit will be helping various farmers in doing their job safely. So with reference to this, you let me know what is, say, the answer of the same in the comments below. Recently, the Ministry of Statistics and Program Implementation has released the results of the annual survey of unincorporated sector enterprises 2023-24. And here, these are actually the enterprises which are known as unincorporated, which are belonging to the informal sector. These are comprising of the MSMEs, household units, and also including those, say, hired workers, which are, say, sometimes even self-employees, right, or who are doing self-employment. So in this one, we will be looking into the various, say, data and the various, say, aspects, and say what are the implications of the data. And here, when we talk about this, say, particular survey, here, if you can see, the survey is breaking down the findings into manufacturing sector, trade, and other services. So it is classifying into 3 sectors: manufacturing, trade, and services. Also, this particular, say, survey is looking into playing a vital role by giving data on so many important aspects of the informal sector, right? We understand that the informal sector in the country is comprising of around 90 to 95% of our total workforce. That means only 10 to say 5 to 10% of India is having formal workers or workers with social security benefits. So there is always a conscious effort on the part of government to trap or actually to capture the data of the informal workers in the country. Because if we do not capture the data, we cannot effectively target the people who need social security measures and the benefits. And also we need better amount of accountability of the informal sector in our GDP, right? Because we know that the GDP does not account fully for most of the informal activities, because whatever the income is generated in the informal sector, they are generally not not very easy to calculate within the purview of the GDP calculations. But over a period of time, we have seen that in 2015, government actually has revised the GDP data and has captured and is trying to get data from the MCA 21 database, which is looking into some of the informal sector of our country, but that is not enough, right? So that is why time to time we have this say survey which is known as the ASU survey, as you can see here, right? It is looking into the manufacturing units, the trade, and the other services generally which are not covered under the Factories Act of 1948 and the Organized, say, Manufacturing Sectors Annual Survey of Industries, the ASI. So ASI and the Factories Act is covering those establishments which are covered in the formal sector, right? So here we'll be now looking at the key findings. Firstly, if you can look at here, from 2020, 21, 22, 22, 23, 23, 24, there have been quantum jumps when we talk about, say, the emoluments per formal hired worker in lakh rupees. So based on years, we can see that there is a growth of, say, manufacturing, say, for formal workers payments or salaries. So that is a good sign that in the country, the manufacturing wages are increasing. So this is actually something which we can also write in our answers. So please do mention, please write this data down in your notes, right? Now, when we talk about, say, the other important findings, so we'll be taking the help of this data. So firstly, if you can see the number of establishments, right, from 2021 till 2024, if you can see, right, right now we have around 73.4 crores establishments, or say millions establishments. When we talk about the workers are also increasing over a time along with the establishments, right? So the year-on-year growth is 12.85%. That means this amount of, say, unincorporated establishments are growing at a very fast pace. And also when we talk about the economic significance of this unincorporated enterprise, or how much they contribute to the GDP of the country, it is also rising proportionately. That means it is rising at a pace of 16.54%. So these are very important data for our economy answers and for our essays, for ethics also, when we talk about how the informal sector is contributing, right? Now, when we talk about, say, the salary, emoluments for hired workers, as we can see here, that has increased over a period of time. Also, when we look at, say, some more data here, number of establishments are increasing over a period of time. But here we have to keep in mind that the rural enterprises are more than the urban enterprises, right? Please do keep these patterns and trends in mind. Also, when we talk about the, say, ownership pattern, we have, percentage of female ownership, right, at 22.9% 2022-2023. This has increased by around, say, 4-5%, right, in this particular, in the last survey. So we see that women empowerment is also increasing because we have so many government schemes. Firstly, we have priority sector lending from the various banks, in which we have just seen that small finance banks have to provide 75% of their loans to the PSL. Also, we have the same with reference to commercial banks, right? We have various other initiatives such as Stand Up India, which is also helping us in this particular mission. We are also having various innovative initiatives such as setting up startups, right? Forming various FPOs based on women membership. We have various self-help groups, due to which this number has increased from the last year, right? So based on these outcomes, we have again have one MCQ. You will let me know what is the answer of the same in the comments below. Now, recently the RBI has enhanced the collateral-free loan limit for farmers. It has raised the limit for collateral-free loans from 1.6 lakh to 2 lakh rupees per borrower. And this is why, this is because, right now we have high amount of inflation in the country. Also for the farmers, the costs are rising for inputs. That is why we have this collateral-free loan limit that has been increased. And here we have to understand that decision is taken generally due to two things. Right? Firstly, because we have inputs which are, the cost of inputs are rising over a period of time. Secondly, we also have inflationary pressures. So generally, whenever farmers will be going to banks to take any loans, the banks will be asking for various collateral, right? For various collateral details from the farmers, and this will be helping around 86% of the small and marginal community who do not actually secure credit. So RBI has enhanced the collateral free loan limit, that is up to 1.5 lakh rupees. Up to 1.5 lakh rupees, the farmers need not give any collateral, right? No collateral is required for loans up to 1.5 lakh rupees. Because inflation is rising, the costs are rising, it is becoming very difficult for the farmers to carry on their activities, right? Also, we have to understand that recently we had this modified interest subvention scheme, right? So this is actually what we understand, that in this aspect, the farmers are given loans at, say, concessional interest rate. For example, if the market interest rate is 10%, the government can tell that, okay, I will be giving you a subvention of 5%. That is, the effective interest rate becomes 5%. So this is also another scheme along with this, which is actually aimed at alleviating the troubles of the farming community. So based on this, you let me know what is the answer of the same in the comments below. Now students, recently the windfall gain taxes have been abolished, and to understand windfall gain taxes, let us understand what happened immediately after Russian invasion of Ukraine. Now immediately what happened is that the prices of fuel, or say crude oil, skyrocketed. Now this was an opportunity for those people who already had huge amounts of crude oil with them, because suddenly the prices have risen. So don't you think this is a condition where people can get super normal profit? Because, for example, maybe the earlier crude oil prices were 100 rupees. Due to Russia-Ukraine crisis, because Russia is one of the major supplies of crude oil. The supplies were hit, the supply chains were hit in the region. This is why the prices have increased from 100 rupees to maybe 200 rupees. But there were already stocks, right, of 100 rupees earlier with the producers. So producers right now will be selling the same at 100 rupees. No, they are very clever. They are always profit minded, right? They will be selling at super normal profit. So don't you think that this is some extra profit that the suppliers will be entitled to sell at any price that they want or at a higher price? And that is where we have a term for this, which is known as windfall gains, right? These are actually known as windfall gains, and this not only happens with reference to crude oil, it happens with reference to many other aspects, such as capital gains, such as so many other aspects, such as say for example, if there is a particular say community which is stricken by cyclones, so maybe tomorrow there can be a person bringing water bottles of 10 rupees and selling to them for 50 rupees, because in cyclone prone areas we do not have say potable water to drink for a couple of days. The same was also seen during COVID, during the second wave of COVID in New Delhi, when simple oxygen cylinders were sold for lakhs of rupees when they cost around say 1,000, 2,000 rupees per night, or even much more below than that. So these are some activities which some producers of raw materials, finished goods, they do whenever they see an opportunity of increasing the prices. Now what happened is there, whenever the prices of crude oil or fuel increased across the world, our domestic oil producers or holders of crude oil, right, they also saw their profits rise, right? So this is exactly what the government of India did. Government of India imposed various say charges, such as special additional excise duty and various other aspects, such as additional excise duty, road and infrastructure cess, to profit or to actually tax this excess amount of supernormal profit. So based on the windfall gains, if any sector is having this abnormal gain, right, so government is going to tax that activity. Generally the government does not leave any activity untaxed except for exceptional cases. So that is why we see this windfall gains tax, right? So generally we see right now, in 2022-23, the windfall gains taxes were actually bringing a lot of revenue, right, for the for the government. If you can see here, 2022-23, this was the collection of 25,000 crores only based on the windfall gain taxes. But over a period of time, the prices are the prices of crude oil are decreasing over a period of time. That is why the windfall gains taxes collection, they have also decreased right now. And also there are many industry experts which tell that if you tax more, it increases the cost of doing business for us, right? The cost of doing business increases. That is why maybe the government is not incentivizing further investments in this particular aspect. So here investment in the energy sector can slow down or fall down. So due to decrease in prices and also due to industry criticism, the windfall gains taxes right now have been scrapped or abolished, right? So this is all the thing that you need to know with reference to this particular topic. After this, you let me know what is the answer in the comments below of this MCQ. The Union government has launched a very important policy known as the Jal Vahak scheme to bring in a greater amount of harmony for the inland waterways of our country, right? So with reference to various cargoes that we have in the country, right? So we can transport the cargo using the inland waterways, that is around 13 waterways that we have proposed in this particular project. So if you can look at this particular map, we have so many rivers in the country, and there are nations such as the Netherlands, such as China, even our neighbor Bangladesh, who uses the river waters for connectivity, right? So in India we have around 20,000 kilometers of navigable waterway. That is, if we calculate all the lengths of the rivers, in which we can transport various goods and generally goods for cargo purposes. For example, if I want to transfer something from Kolkata to Allahabad, I can take the train route, I can take the air route, but the cheapest say transportation is on the river side, that is using the rivers for our waterways, almost using the rivers like our highways. So we have around 17 or 18,000 kilometers of rivers. We have around 2,200 kilometers of canals, which we can use for movement of cargo items, because we have to understand the rest of the countries are building on this, and also it is expected that cargo traffic from 2014, 2024 and going on forwards, it is projected to increase over a period of time. So that is why we have to understand that this scheme has been introduced to revolutionize our logistics sector with the help of waterways. So here the trade between National Waterway 1, 2 and 16, if I can show you again the various waterways here, it is very important for us to be aware of the national most important waterways and where these are all linking to. So we have the grand ambition to integrate the 1, 2 and 16 national waterways through itself with smooth and scheduled services. With reference to various ferries, with reference to cargo transport, we can actually have investments on the same. And also when we talk about say increasing cargo, so the cargo owners, they can avail 35% say discount on the various operational costs, such as running the ferries, running the operations, the salaries and so on. So we can have 35% concession only on those operators who are willing to operate more than 300 kilometers of say waterways in this particular say scheme, right? It is also facilitated to shift around 800 million ton kilometers with an estimated investment of 95.4 crores by 2027, right? That is nearly 75 almost 17% of the present cargo. So this will be having an economic advantage. It will be saving 35% of the expenditure of the cargo people, and also the the transportation here is much more eco-friendly in nature, right? And here there will be so many other details of this particular scheme, such as there will be a fixed schedule sailing service that will be plying between Kolkata, Patna, Varanasi and various other routes, right? The fixed scheduling sailing service is going to help a particular route in this waterways. So based on this, you let me know what is the answer in the comments below. According to World Bank reports, India emerged as a top recipient for remittances. And let us straight away go into the report. Firstly, when we understand remittances, see, remittances are, transfer payments that migrants internationally send home their parents or their relatives some money over a period of time. According to the World Bank, remittances help reduce poverty, enhance nutrition in various developing and least developed countries, because we have to understand 1 in 8 people worldwide depend on remittances. This is a very huge figure. If you talk about China, if you talk about India, Bangladesh and so on, we have so many peoples abroad. They send back home some money, and based on that 1 in 8 people depend on remittances. Over 50% remittances are sent to rural areas, not only in India but in the world, right? So the importance of remittances we can understand there. Also, 80 countries rely on remittances for at least 3% of their GDP. So you can understand, right? That is even not the amount that we spend on our health, right? So that is the amount of remittances where 80 countries depend on at least. Also, when we talk about say the top 5 remittance receipts countries here, we have India at the first rank, right? We have Mexico, China, Philippines and Pakistan following India. Also, when we talk about the flow of say money with reference to remittances and FDI, in India we see that we have greater amount of remittances that flow in our country, right, than FDI and various other aspects. So we understand, if there is a question that the flow of remittances is more than FDI, then this is the correct answer. Correct? Apart from this, you let me know what is the answer of the same in the comments below. Finally, we have come to the last article. This is about the Household Consumption Expenditure Survey 2023-2024. This is actually a very, very important survey. When we talk about the details of the same, this is actually a report which is released by the Ministry of Statistics and Program Implementation. For prelims, these facts are very important. Now, this is designed to collect information on various consumption items and expenditure items of the households on goods and services. So based on this, the government officers will be going to various parts of the country to collect information what the people are consuming, what the people are expending on the various goods and services, right? It is providing the data to determine and update the basket of consumer goods and services, and also the same data is used for calculation of consumer price index, right? Now the data collection is also used to measure poverty, inequality and social exclusion, where the monthly per capita expenditure compiled is a primary indicator used for most analytical purposes in economic studies, right? And also the estimates of the present year is based on the data collected from how much households? Around 2.6 lakh households, right? Mainly we are looking into the rural areas where we have 1.5 lakhs of households, then in urban areas where we have 1.07 lakh houses which were surveyed, right? So these were done across all the states and the UTs of the country, and there are sometimes immense debates as to what are the validity of such data and so on, because we have to understand the sample size here is quite small, right? We are talking about around 2.6 lakhs of households in a country where the population is more than 10-20 times, right? It is even much more than that. Keeping those things aside, let us look at what are the highlights from the reports. Firstly, when we talk about the all India consumption trend, when we talk about 2011-12, 22-23, 23-24, if you see, the urban India has always been spending more when it comes to the average monthly per capita expenditure, right? And when we talk about the difference between the various, say, urban and rural, expenditure, the difference has narrowed in the last year. It has narrowed by around 2%. That means that the urban India is consuming a little more higher than the last year, right? But we have to understand that the rural India is also catching up with that expenditure, correct? When we look at the share of food in monthly per capita expenditure, we find that rural India spent more on food, from 1999 to present times. It has been always that the rural India has spent more amount on food, because we understand the incomes in the rural India are lower than the urban India. So that is why the percentage share of income that goes in food consumption is much more. When we look at share on food items based on, say, beverages, processed food, milk products, vegetables, we see based on urban and rural India, if we can look at the present data here, right, we see that the urban India uses more of processed food and beverages, rural India uses more of milk and milk products, vegetables are consumed more in the rural areas, right? So we must be consuming more vegetables and milk products in the urban areas, correct? So that is why we get this understanding. When we talk about the non-food items with reference to rural India and urban India, so we can understand with reference to latest year only, we need to note that conveyance in the same urban India is having a better amount of expenditure with reference to transportation and so on. With reference to durable goods, we know we again have the urban India which is spending more on durable goods. Fuel and light, again urban India is spending more on the same. So we have understood that urban India spends more money on non-food items, right? Where on the other side we see rural India spend more on the food items, as we have just discussed in this previous one. Also, when we talk about the top 5%, right, the top 5% has actually, or say the top 5 rich individuals have actually seen a decline in monthly per capita consumption for the rural areas and the urban areas household compared to the last year. The bottom 5% has seen a significant increase in monthly per capita consumption. That means that the rich people are seeing a decline in their consumption, because obviously the money that they're earning is much more than the money that they're spending for average items. Maybe they're investing in land, buying stocks and so on, right? But the bottom 5% are seeing increase in incomes over a period of time. So better economic opportunity is actually helping them to spend more, much more than the percentage what the richer people are spending. In particular percentage time, we can understand that the bottom 20% are having highest percentage growth in spending, that is seen higher in rural areas. So more poorer individuals are getting better amount of incomes right now, spending more in rural areas. Also the top 20% are seeing marginal growth, right? When we talk about consumption inequality, right, and talk about the Gini coefficient, which is a measure of inequality, right, we see that the rural areas and the urban areas has actually improved their inequality data. So here we actually understood the entire say highlights of the same here, and this was everything that we need to look at, from the perspective of the survey here. Now at the final end, you please let me know what is the answer of the same in the comments below. With this, I thank you all for being a very patient audience. I hope that the two parts were very enriching for your information and examination. I hope that you all become future officers. Till then, all the best and best of luck. Thank you.